Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Buckle up for another earnings season. This one, though, is a key one, and our panelists will tell us why. Their editor-at-large, Steve Reitmeister, senior market analyst, Charles Rotblatt, and top market technician, Kevin Matris. So this is a key earnings season.
Absolutely.
Because we're looking for a decline. Marks like the 9th straight decline in earnings, which by itself is kind of unique since records have been kept. But it also has to do with regard to the recovery too, whether there is a true recovery underway, right?
Yeah, we've talked about this one a bit in the past. We talked about how, obviously earnings season is always important, okay? But this one seems to have a little more oomph to it than others. When we take a look back at the first quarter earnings season, we're in the throes of a horrible recession, and all those numbers needed to show is that here again things had not fallen off a cliff, which is what they were showing. The second quarter earnings numbers, so when we take a look at the earnings reports that came out in July, they had to show that there was stabilization and maybe some modest improvement, but the really growth was not what people were looking for. It was about that were things as good, if not slightly better, in the first quarter, and the answer was yes, and that's where the market continued to rally. But now the expectations are looking for a little bit of growth, so a little bit on the sales line, right, and not just about margin improvements and things of that nature. So is a really an uptick in buying activity. And that is why it's so important what comes out of this one. And if, hopefully it gets delivered, and that's good things going to happen. If it doesn't get delivered,
so you don't think the market's going to be satisfied with just another less bad quarter?
Correct. That's what the second quarter was about. This quarter is show me some signs of actual growth, of actual top line revenue increases, which drives the profit increases. Yes.
All right, so now let's go to Charles, because you scour these industries on a weekly basis looking for these trends. Is that what we're going to see, or is this going to be just another less bad quarter?
I do disagree with Steve. I actually think it'll be a little bit less bad, but I do think it will depend on the industry, because some industries we do want to see an improvement, and I think where you really want to see an improvement is not year over year, but sequential to last quarter. You want to see sales being better in the third quarter than the second quarter, except for obviously companies that experience seasonal trends. But there's one thing we should probably put a big asterisk by is the whole commodity sector, oil, steel, metals. And the reason is that the commodities bubble popped in July 2008, which was the third quarter of 2008. So these companies are up against year-over-year comparisons that just are ridiculous. And we'll see that with Alcoa's numbers on Wednesday. They are going to look horrible on a year-over-year basis simply because the comps they're up against are so high. But I think for some other companies, you do want to see an improvement from the second quarter, and I think we do want to see third quarter sales actually be better than expectations. Not necessarily year-over-year growth, but definitely, as Steve implied, moving in the right direction. We can no longer just rely on cost cutting. We want to see some signs that the economic recovery, or at least the stabilization, is now flowing through to what these companies are seeing in terms of business.
What about employment, the employment picture? Can earnings continue to recover if employment remains high?
Possibly. I think it depends on the sector. And really, when you look at the retail sector, it's really been all about expectations. How are sales holding up relative towards expectations? But for some other companies, we are seeing people buying. Netbooks, for instance, are flying off the shelves. And you talk to anybody in that sector, we've seen semiconductor sales up 6 months in a row. So we are seeing some areas where the high unemployment's not really having a bad effect. But obviously, when you look across the whole economy, it is going to be a drag on growth. But even though we're seeing unemployment at near 10%, even when you factor in those people who are involuntarily unemployed, probably 80% of Americans are actually working full-time who want to work full-time. So it's important to realize, as bad as the unemployment numbers are, most Americans still have jobs and are still, maybe they don't feel completely secure in their jobs, but they are still getting regular paychecks and expect to continue getting a regular paycheck.
So quickly, before I move on, what are you looking for 3Q in terms of numbers?
In terms of numbers, I'm actually looking for sales to be down about 7%, and for median company earnings to be down about 15% for the S&P 500. I think the actual numbers will be slightly better than that once we factor in positive positive surprises. But right now, that is what the street is factoring in.
Okay, and that Wednesday that Charles referred to with regard to Alcoa is October the 7th, which is when they report. But Kevin, probably one of the biggest purchasers of netbooks, by the way, sitting right next to you.
I bought 3 in the last month.
That's what I'm saying, in a relative time period.
See, my point's proven.
You only have 2 hands. So
I need one in every
there might be a
room.
little excess there.
Right.
Okay.
But you have a different perspective that you want to share with us on this earnings season.
Yeah, kind of. First off, third quarter earnings is going to be very, very important. But in preparing for this quarter's earnings season, I did some research and check this out, some very interesting statistics. There is a larger number of companies reporting positive surprises in each of the last 3 quarters, positive earnings surprises. I'll get to sales in just a moment. But for the quarter ending 9/08, there were 286 companies in the S&P that posted positive EPS surprises. In the period ending 12/08, there were 293 companies posting positive surprises, so that was an increase. For the period ending 3/09, there were 312 companies posting a positive EPS surprise. And for the most recently completed and reported period, which was 6/09, there was 345 companies posting positive earnings surprises. So in that sense, this trend of improvement when it comes to earnings has been very, very encouraging. What is less encouraging, but still interesting to look at, is the sales increases. We only have 1 month, a quarter-over-quarter period of sales increases, or sales surprises, should I say. For the quarter ending 3/09, only 148 companies posted positive sales surprises. But for the quarter ending 6/09, 193 companies posted positive sales surprises. The other interesting tidbit, though, that I think makes this very important is that if you were to look at the percentage of companies posting positive earnings surprises, you can see that is on the rise. So for the period between 9/08 and 12/08, you saw a 2.4% increase in the percentage of companies posting positive surprises. For the period between 12/08 and 3/09, it was a 6.5% increase in positive surprises. And for the period between 3/09 and 6/09, there was over a 10.6% increase in positive surprises. So seeing that trend of improvement continue does suggest that companies indeed are in the right place, and they are continuing this trend of improvement. Getting back to sales, which is going to be the really, really important thing everybody looks at. Again, there's only 1 quarter-over-quarter period of increases, but the percentage increase between 3/09 and 6/09 was over 30%. So seeing such a great start on sales surprises, if we can continue to see that trend develop the way the earnings have, I think that's going to bode very well for the stock market. But as Steve had said, if they miss, that is probably going to spell some backpedaling and some pullback.
I hope everyone got those numbers because there's going to be a quiz following today's roundtable. So I hope everyone got that.
Charles, where is the good news going to lie in third quarter earnings reporting?
Well, I think there's 2 things. If you're looking for actual growth, one sector particularly is healthcare. No big surprise there. Most people are keeping their health insurance. And obviously, if you need medication, you need surgical procedures, and you have insurance, you're going to get the medical care you need. So consistent grower, less economically sensitive. We're also looking at some of the insurance companies, such as Hartford or Allstate. They've actually been able to push through some higher premiums. The improved stock market has helped their portfolios. So again, an area where you're not really expecting to see, normally we expect to see growth at a time like this, but we should actually see true growth. And it's not just earnings growth, but actual revenue growth with those sectors as well.
All right, I want to get back to Kevin real quick because you're the technician in the crowd here. Can the market keep acting independently of earnings reports? In other words, can the market keep going higher if these earnings reports don't come out to be what the market's looking for?
Not forever. Of course, because we had some negative economic reports over the last couple of weeks, if we get some negative earnings and worse, some negative sales, that is really going to derail the market. If, in fact, we don't get everything that we're looking for in earnings and sales, but we do get better guidance for the next quarter, If that happens and we can also get more positive economic reports that is resuming the trend of improvement sans the last couple of weeks, that could be enough to sustain the market. But you really need to see earnings and sales finally hit enough talk. You need to show us.
So what's this all going to mean to the stock market here going forward?
Yeah, what I'm taking a look at, I'm a person who harps on this pre-announcement season, meaning the end of the quarter that's about to report and that week or two just before earnings come out. And that's usually when the companies with the worst numbers come clean. I will say that I can't think off the top of my head more than a couple companies that had pre-announcements. That's very good. So the amount of potentially horrific news, I believe, is very muted. Okay. Now you had the fact that, as Kevin pointed out, the market did fall for about 4 or 5% prior to earnings season. That helps also mute expectations just a little bit. And so I am relatively, cautiously optimistic that there's no horrible news there. So no reason for a significant drop from earnings season. And I think the numbers hopefully will be good enough to sustain where we are and hopefully push beyond. And that's mostly because I have not heard really a drop of bad news during this pre-announcement season. I think it foreshadows good news ahead.
Is the bigger question mark 2010?
The bigger question mark is the whole entire next decade and what it means to have all this debt.
All right. They'll keep watching the latest trends for you, and you keep watching various places on Zacks.com, like our analyst blog and other commentaries that appear there on a daily and weekly basis for updates on their thinking as to earnings, the markets, and a variety of other issues. With everyone here at the Roundtable, I'm Terry Ruffalo.